All right, today we're doing something a little different. We're putting a company, ACHR Aviation, on the exam table for a full corporate physical. We'll check its vitals, we'll diagnose its strategy, and then offer a final prognosis. And all of this is based on their latest financial checkup. So let's get right into it.
And really, this whole checkup, it all boils down to one massive high-stakes question. Can ACHR Aviation actually get its flying taxis in the air over Los Angeles in time for the 2028 Olympic Games? I mean, it is an incredibly bold goal, and it frames literally everything this company does.
So here's how we're going to break this down. First, we'll look at the big idea, the flying taxi dream. Then we're going to check its financial vitals, look under the hood. After that, we'll dig into their strategy, the big bets they're making. Then, of course, we have to talk about the risks, what we're calling navigating turbulence. And finally, we'll wrap it all up with our prognosis on the road to takeoff.
Okay, let's kick things off with part one, the flying taxi dream. Because before we even glance at a single number, we really need to get what it is ACHR's trying to build here.
So the core technology is something called an eVTOL. That stands for Electric Vertical Takeoff and Landing Aircraft. But honestly, don't worry about the acronym. The concept itself is actually pretty simple. Just picture a quiet, all-electric helicopter that's built specifically to hop across a crowded city, flying right over all that traffic down below. That machine is really the heart of this whole story.
And that idea perfectly explains their mission. See, ACHR isn't just trying to sell an aircraft. They're trying to sell a whole new solution. They want to build these things called urban air mobility networks. The big goal here is to give people in gridlock cities, like Los Angeles, a way to just completely bypass those soul-crushing highways. This is the big, shiny dream they're selling.
Okay, so we get the ambition. Now it's time for Section 2, where we check the company's financial pulse. Let's take a look at ACHR's vitals. And right away, you see the central tension in ACHR's whole financial story. On one hand, they have a crazy high burn rate. I mean, think about it. Inventing the future of transportation from scratch, it's wildly expensive. But on the other hand, they have managed to get some incredibly strong financial backing. They have a massive war chest to fund these plans.
And this first number really shows that burn rate in action. In just the third quarter of 2025, ACHR lost almost $130 million. That's what it cost to design, build, test, and try to certify a brand new type of aircraft that's never existed before.
But, and this is a huge but, here is the other side of that coin. Even with those heavy losses, ACHR is sitting on a mountain of cash. As of that same date, they had over $1.6 billion ready to go. This is the war chest that lets them keep spending that much money as they race to get their business off the ground.
So the obvious next question is, where is all this cash actually going? Let's break it down.
This table from their financial report really tells the whole story. You can see their total operating expenses for Q3 2025 were almost $175 million, which is a pretty big jump from about $122 million the year before. And look where the biggest chunk is going. Research and development. That shot up by over $30 million in just 1 year.
And this chart makes it even more obvious. The vast majority of their spending, over $120 million, is going straight into R&D. That's not just corporate overhead. That's the money for engineers, for materials, for prototypes, for all the testing. It shows they are pouring their cash directly into making this flying taxi a reality.
What brings us right to part 3, the big bets on the future. I mean, with over $1 billion in the bank, how is ACHR actually using that money to try and win this race to 2028?
What's pretty striking is just how fast they were moving in late 2025. In just a few weeks, they bought key patents from a rival. They signed a huge deal to take over a strategic airport right in LA, and then the very next day, they announced a plan to raise another $650 million. This is not a company that's sitting still.
And this quote from their own filing connects all the dots perfectly. That Hawthorne Airport deal, it's not just about buying some real estate. They say it right here, that it will be their operational command center for the LA 28 Olympic Games. They are literally buying the infrastructure they need to make that Olympic dream happen.
Okay, so the patient is ambitious, aggressive, for sure. But, no physical is complete without taking a hard look at the potential health risks. So let's move on to part 4, navigating turbulence.
So in every public company's report, there's this section called forward-looking statements, and it is so easy to just gloss over it. But what it really means is super important. When ACHR talks about their strategy or their future revenues, what they're legally telling you is, hey, Our plans can change, our projections might be totally wrong, and our success is absolutely not guaranteed. It's the basic uncertainty baked into any company like this.
And it's not just abstract risk. Their filing points to a very specific headwind. They're currently a defendant in a consolidated class action lawsuit, and the trial is set for May 2027. This is just one concrete example of the kind of legal, financial, and regulatory hurdles they've got to clear.
So with all of that in mind, let's get to our final prognosis in Part 5, the road to takeoff. What does this all add up to?
Well, when you lay it all out, Archer's game plan is actually pretty clear, even if it's incredibly difficult. Step 1, raise billions. Check. Step 2, spend a ton of it on R&D. Double check. Step 3, make bold strategic acquisitions. They're doing that. And now they're in Step 4, navigating that minefield of risks as they race against the clock for Step 5, getting operational before that Olympic flame is lit in LA.
Which brings us right back to that ultimate question. The diagnosis seems clear. Archer is a company with a very strong financial pulse and a super aggressive plan to achieve its goals. But the prognosis, well, that's still uncertain. With a massive war chest but a monumental task ahead, will their big bets pay off? We'll all have to wait.